What's happening? How you doing? Nicholas Say podcast. Doing an alert today. Not really a monologue, although it is just me talking. There is right now happening on Christmas Eve, the 24th of December, 2018, the makings of what could become one of the most serious liquidity crises to hit the international financial markets in the history of humanity. Whoa, right? I have no idea how many people are going to listen to this, but I just thought it'd be fun to throw it out there. I was talking to my buddy yesterday about it, because most people are pretty far removed from the financial markets or economics or whatever, and it's more or less how I make my living at this point, aside from the odd marketing job. But what's happening is that, you've had a huge expansion in global debt since 2008, right? Central banks bailed out the major banks and pumped a lot, trillions of dollars, into the global financial system. Most of that money went to the upper 1% in terms of, rich people. They got the money, although not exclusively, but most of it. And that money went into assets, right? So cash was spent into assets, which can actually create a positive cycle where that cash spent allows people to create more debt because of fractional reserve banking. But here's the thing: there's not a lot of cash out there right now. A lot of assets have gone up in value. Real estate being an example, equities another example. Although after this year, people have a hard time remembering they're still way up from the dark days of 2008. People, man, I remember back then. I was still in the States. That crash started to unfold, and I was in an upper middle class neighborhood. Everybody had a sour face, and like nobody was talking about it. I'm like, give me a break, you guys are all fucking greedy piglets. Anyway, the piggies are about to get slaughtered again. Um, I'm gonna put some links because this is totally free form, off the cuff stuff. I might get a few details wrong, but I will if you want to read through the 4, 5, or 10 links that I put in the description, you'll see what I'm basing my opinion on. And it is an opinion. I don't know for sure that this is the big one, that this is it, but I want to be on the record, number one, because I feel like I should put the information out there, because so far, like, liquidity crisis, quote unquote liquidity crisis, is not flashing across global news outlets. And I think that they have a responsibility to warn average people what's coming. And I know there's the argument, well, you don't want to incite a panic. Well, everyday people don't have much control over the credit market, so that's kind of a stupid argument, but whatever. So here's what's happened over the last couple weeks. Everybody knows that the stock market's been volatile. What is maybe less well understood by the general public is the state of junk bonds and leverage loans. Now, investment banks make a good business by underwriting these issues and then selling them off. It usually flows into other hedge funds or sometimes into funds that the general public can buy, but generally it's contained within the financial market. Over the last couple weeks, major banks have basically withdrew these bonds, these offers from the market, because there's no one who's willing to buy them. Now, the exact same thing happened, or something very similar happened in 2008, but the reason, my view of the reason why, is somewhat different. In 2008, the lack of transparency on mortgage bonds created a climate where nobody really knew what the other bank's balance sheet looked like, so nobody would trade. It's not that they didn't trust the value of some of these bonds, like, it's not that they didn't trust the value of high yield debt in 2008. They couldn't make a transaction happen because they couldn't trust any of the counterparties. Now, what's happening today is a little different, because so far as anybody knows publicly, all the banks are solvent. There's no solvency problems at the highest levels of banking. But for some reason, no one will touch this high yield debt. Measured in, I think the last time I looked, at hundreds of billions, although it could just be tens of billions. I'm not 100% sure. Again, link in description for sure. And this is a problem of bankers wondering, or whoever normally buys this stuff, wondering if they should put their cash at these high yield debt instruments, be they bonds or the bonds directly, or funds that buy the bonds and then resell them to investors. Someone late last week, I'll link to the Zero Hedge article, decided to just dump a bunch of a high yield bond fund. I think it was in the billions, but it could have been the hundreds of millions. It was a pile, and nobody wanted to touch it a single bid. There are no competing bids. It went single bid. It totally wrecked the tape when it hit the market. And there's a lot of other stuff that I could point to. Those are two pretty concrete events, and the first one, more than the latter, is really problematic, because when the debt markets freeze up, that's a big red flag. We had an inverted yield curve over the last month in the U.S. There's lots of kind of little red flags popping up, but that's not the big problem. The big problem is something, and this is definitely linked in description. Guy by the name of Jim Rickards, who's a total investment veteran. When LTCM, long-term capital management, went belly up in '98 after Russia defaulted, this guy was at the table when they were negotiating in New York to get the long-term capital management, which was a massive hedge fund, off the hook basically with their creditors, who were all Wall Street banks. Interestingly enough, the only two people who wouldn't go in on that were Lehman Brothers and Bear Stearns. And you saw what happened to them in 2008. See you later, Sandy Wiley, poor fucker. Anyway, so this guy was at the table. He's definitely in the know. He also has connections with the U.S. government, works on this and that. Anyway, he has this idea, among others, that I definitely respect, of he models it on Kurt Vonnegut's idea of Ice 9. And the idea of Ice 9 was that it's like something that'll freeze any water. Any water that comes in contact with it, it'll freeze. So, it spreads globally. I'll link to a video and an article where he talks about it. Now, the idea is that a liquidity crisis in today's financial market could spread in exactly the same way, right? Because if there really is a fundamental lack of liquidity in the international markets, because our markets are designed to be so liquid, as soon as you have a liquidity problem in one market, like, say, for example, high yield U.S. debt, the same people, it's not like there's like billions and billions and billions of little people like participating in these markets. It's a bunch of it's a few, not a few. It's a, I'm sorry, not a bunch. It's a few very, very wealthy entities who are the big participants in these markets. And if they need liquidity, right, if one or two or three of them really needs liquidity, they'll just go from asset class to asset class selling to raise cash, right? Because, a bond is not cash. Although some of them, depending on your status, you can swap them for cash with the central bank or something similar. But look, stocks aren't cash, right? And so if there is sort of, like the ultimate margin call or whatever, or just for whatever reason, people want, or one or two or three or four financial entities, big players, needs to raise cash, they're going to go to whatever market's open. So obviously what happens is if one market starts to sell big time, the regulators are going to get involved and they're going to shut that market down. Well, that doesn't necessarily lead to a lessened need for liquidity. So these entities will obviously have interests in other major markets, and they'll go to those to find that same liquidity. Well, the idea that Jim Rickards is driving at is that a relatively small liquidity crisis could morph into a much larger global crisis that slaughters asset values. But ultimately, it's not the asset values that are really the concern right now. The concern right now is the power of the regulators to instill confidence in the markets themselves. In 2008, they were able to do it. Now, that's a big unknown. And that's the real problem, or the real concern at this point, because global central banks have, and the global governments have been going on and on and on for a decade now about how the economy is good, conditions are improving, everything's fine. And if it all falls apart again over the next month or two, or it could possibly be more severe this time around. Um, Major investors and regular people on the street, they're all going to have some pretty serious questions about continuing to trust these entities that are their records looking worse and worse and worse. So definitely keep an eye. I know it's Christmas Eve. It's the last thing on any normal person's mind. Uh, but U.S. Treasury Secretary, whatever his name is, with an MN or something, Nunkin, or I can't say his name. Um, he's got a bunch of meetings scheduled today for Christmas Eve. You've seen asset values get slaughtered across the board over especially the last 3 months of 2018, and the real canary in the coal mine is the frozen high yield debt market. So keep an eye on that, and definitely be ready to change your view of both the monetary system and the global economic condition, because it's highly probable that the actual economy has been papered over with elaborate trickery and lies by major media outlets and global banking interests. And if now is when that is crumbling, now there's no guarantee that it is, and I hope that it isn't. Or said differently, I hope that there's a way forward that doesn't involve a crisis. But based on prior crises and the way humans tend to react in situations like this could be it. The next 2 or 3 months, or the next 2 or 3 weeks, could see some pretty major moves in the globe's largest asset classes. That is corporate debt, government bonds, possibly the derivatives market, the foreign exchange market. So definitely keep an eye out. Nicholas Say Podcast. I'm just going to put this right out. I got something else. I got some monologues that are far more esoteric going up today too. Hope everyone's good out there. And remember, money isn't really the value. It never was, and it never will be. What's valuable is the connections you make with other people, and the trust that cooperation, or the cooperation that trust engenders. That's what makes money valuable. Not a number on a screen, not what your banker tells you. Keep that in mind, especially if things get tough. Merry Christmas, Happy New Year, Happy Hanukkah, Happy whatever to whoever. You should make every day Christmas. Love you all. Have a great day.